Okay, traders. So we are back here again today, and this is one question that I think about, and you know, I resonated with, and I know a lot of you guys out there, you've also been wondering the same questions as well, especially for my new traders and all my beginner traders or my intermediate traders, right? Because if you are advanced and you've been profitable for years, you already know what the heck you're doing. So you probably don't need a video. You can go ahead and skip it. I've been thinking about the same thing. A lot of people stress on you got to know how to enter the trade. You got to know how to do this and do that. Okay, well, when you enter the trade and you are in profit or you are losing, how do you manage your trade? Right? It's the same way if you have a business, the business is succeeding. How do you maintain that success? Or if you are losing, how do you recover from that to get back to break even or success, right? So I think about the same thing all the time. If I'm in a trade and the trade is going against me, it's like, yo, what do I do, right? So I'm going to be sharing part of my strategy with you today where when I'm in a trade, how do I manage my trade, okay? Again, this is almost like a live video, so I'm not going to be showing all these pop-up and like fancy stuff. I'm not going to be doing that today, but when you enter the trade right now, let's say we're going to take this base example, okay? Say you enter the trade and you did all of your analysis, you find your trend, you find your high time frame, the potential place in which the candlestick might, I mean, not the candlestick, but the trend might be ending or making a reversal, or basically a cautious place to just look for when you are in a trade. After you've done all of that, you're going down to your entry time frame and you found a trade, for example, right? Say, let's find a perfect spot here to do this trade. And then we'll probably do like one or two few examples where we'll be looking at as well. Okay, so let's look at this spot right here. And I will try to draw some line here. I just want something that is pretty much closer. Maybe let's go on a little bit of it. Let's go in the 15-minute time frame and find that so it's easier to take a look at it. Okay, so because I don't want to bore you with all this stuff. Okay, so now I think this should be a perfect example, right here. We are going to be working in this box. Let's go to ships. Right here is where we're going to be doing our example in here, just right in here. So okay, say you did all of your analysis like we just explained. Now you are in a trade. Okay, you know that this trade is going to be in a downtrend, and you found a perfect entry right up here at 20,400. Boom, you enter the trade. This is the entry, and your stop loss is above here, right? Now this could be another video that we'll make on how to place. I don't like to like have these, makeup terms and stuff where it's like, oh, how to place the perfect stop loss, because there's nothing such as a perfect stop loss, because you don't have the money to move the market. You are just a retail trader. So I'll find the terms for that or the title for that. But I think we gotta make a video on where to place your, okay, I think that's a perfect title. Where to place your stop loss, okay? But say you place a stop loss up here and you are risking $100, right? And your profit target is somewhere down here. Let's find a line. It's somewhere down here, and it's 5 to 1 basically, right? So you have like maybe 1, 2, 3, 4, and then 5 to 1. So when the trade goes against you, you are going to be losing $100. But when the trade goes in your favor, your profit is going to be $500. How do you make sure to take advantage of this long haul all the way to the downside here, right? Now, I mean, obviously, I hope that placing your target is going to be at a place where you've where is somewhere around a potential reversal, it higher time frame, right? So you enter the trade here, and then the trade started to work in your favor. It went right in your favor. It wicked you in. Now you are in the trade. The trade is working. It's happening in your favor. It is going in your favor. We'll go down the 5-minute time frame because I want to make this kind of play out. It's in hindsight, of course, so it's easy to look at it. People might be saying out there, but now the trade is in your favor. It's going in your favor, but you want to protect profit. How do you do that? I'll tell you exactly how I do it, right? So what I do in this case, let's change the color of this from green to yellow, and let's make it bigger. Okay, let's make it a fattest one. Fat. So now you are in the trade, right? And your trade starts to come down here. They start coming down here, start coming down here. Once, what I do is that when the trade is 1-to-1 in my favor, most time I will take my stop loss. Now I'm maintaining my trade, okay? And this is if I'm sitting at my computer. If I'm not out and about, just place my trade, forget it, and then go out to do something else. But if I'm sitting at my computer and watching this, if the trade goes 1-to-1 in my favor, I'm going to cut my losses from $100 to $50. Now, if something great, I'm already in the trade, and the trade is in profit in my favor by 100, but I'm going to reduce my risk to half of what I previously risked. So from $100 to $50. Now I'm still in profit by $100. Okay, and if the trade keeps going down in my favor by 2-to-1, that's when I come here to break even. Right? So again, I'm going to go over that. When a trade, this is how I do it. This is my strategy. Okay, when a trade goes from zero, from my entry to 1-to-1 risk to reward in my favor, I move my stop loss half. So I cut half of my potential loss, which is my bet. I cut it into half, and then now I sit on that 1-to-1 profit I already have. And if the profit keep going in my favor by 2-to-1, now I'm in a risk-free trade. I will move my stop loss in my favor to break even, but just past break even, so that if I get stopped out, I can be able to cover my commission on the trade. Okay, so that's what I do. So I would take my stop loss from here, $100 loss, and I'll bring it just right under here. Basically, my break even, but also protecting or trying to take my commission in case the trade goes totally against me. And if the trade goes like this, for example, right? Say it's going like that, and it went down here, and it makes this kind of 3-leg move, right? Or these 3 points move, where it did this 1, 2, 3, and then move down here like that. Guess what? I'm bringing my stop loss down. Now this is how I maintain my trade, right? Then I'm going to move my stop loss down. Now, no matter what happened, the worst thing that can happen on this trade, I'm going to make $100 in my favor. Okay, so, and then I would just keep doing that. I'll just keep looking for, in this case, just keep looking for support and moving my trade downwards, and moving my trade downwards, and moving my trade downwards. And the biggest part about this is the psychology. When you are sitting and watching your trade, now you were just up by $500, or in this case, you are up by 200, and then you're sitting there and it came all the way close to like, now you're up by $120, and it's like, should I get out? The psychological part there is what really, like, play around with you. But if you know what you want, basically, and just stay, follow your rules, or sometimes best bet, once the trade goes like that in your favor, I would say just place your trade, leave it, and go find something productive to do. Okay, or come to a break even after the trade is 1-to-1 in your favor, or 2-to-1 in your favor. Come to a break even and just go somewhere else. Okay, and in a lot of cases, like I will, and you might ask, what time frame do you do your trade management on? So if it's on a 5 minute time frame, I might go on a 5 minute time frame, but I also like to step it up a little bit, because again, you got to make sure that you are seeing a trade happening from a higher height. Okay, so I'll probably go from 5 minutes to 15 minutes time frame, and then that's where I will manage my trade like we just did, right? Out 15 minutes time frame, and then I'll start managing my trade from that, because then that will show me a higher point, or basically the support, those support and demand, or anyway, I'm lots of words, but so I think you get a point. But so, and that's exactly what I would do. 15 minutes right here, and every 3 leg or move that it makes, you just keep moving it down until your stop loss or your profit target get hit. And this is not how it works 100% of the time. In this case, what would encourage me to do stuff like that, it could possibly be, see what happened here, right here. Once this is broken and the candlestick closes, again, this gotta be, I do this on multiple time frame. I go on the 15 minutes, okay, I'm managing my trade here, but let me go on the 1 hour time frame and see what just happened. Go on the 1 hour time frame, and this is what I see, where, for example, this happened here, right? This previous double bottom or triple bottom right here just got broken and got tested, basically. Even though it wicked out, it got tested. And if I was actually live in this trade, guess what? I would take my trade. I would not wait for my profit target, because what happens here is that it got wicked right here very strongly, it looks like. And the purpose for that, why it got wicked, in my opinion, is because this demand zone right here. Okay, and if I was in the trade live, I would be out. I would have been out, and I would call it either 1-to-1 or 2-to-1 and call it a day and move on my way and just leave it. Pretty much. I think that's how I would do it. Not I think, but that's how I would do it. And so moving your stop loss to protect profit and stuff like that, you got to be going back to higher time frame and see what is going on, right? Like the case I just explained, right? If you were in a trade that looked like, say if I was in a trade, I'll be a lot brave to be trailing my stop loss and protect more profit if I was in this trade. When this previous control swing low got broken and closed above right here, nothing else is right here in my opinion to really hold me. So I'm going to keep going. But if you had trades like this, where in this case there is basically a demand zone right here, and you were in a short trade and the market is coming down and made a bounce here, or the market is coming down here, oh yeah, this right here is going to be my target. Basically, if the market is going to keep coming down here, I'm going to be scared. Or if this happened, and the market was coming down here for the 3rd time to bounce off of this place, I don't care what happened, I'm out, because there is possibility that this market can keep going on, especially the fact looking at these previous bullish moves. Okay, so that's really it. So what I do, again, I'm going to just give you a quick synopsis. When the trade is 1-to-1 in my favor, I cut my loss by half. When the trade is 2-to-1, I go break even, but also covering my commission of that particular trade in case the trade goes against me. When the trade goes 3-to-1, then I go 1-to-1 risk to reward. The worst thing that can happen in that case is that I will protect exactly what I was risking, and I'll be working on that trade with a profit. Okay, and that also determines what the previous history look like. Are there support or resistance? Current price of that chart to the left side, are there support and resistance in there? Should I be concerned what is going on in there, or was it just a big green move to the upside or a big red move to the downside, and in between that there's no support or resistance? Those are things that I look at. So as always, thank you so much for watching this video. I appreciate. Let's all stick together. Let us go through this. It's not going to be easy, but it is going to be worth it, by Art Williams. And again, nothing's going to change until you do. Peace out to you guys. God bless. Have a good day.